Okay, the NASDAQ. Looking here at the TrendPredator Pro, I can simply glance and see that it's telling us reversal continuation is the context. Sorry, I got a little distracted there. So reversal continuation, what does that mean? It means that the price reversed below the previous day's high. And while we're below that previous day high, this is going to continue suggesting that the bias is bearish. Bearish due to the daily chart. As you can see, we've got Tuesday, Wednesday, and Thursday breaking out. The price has dropped below Wednesday's breakout level. So the thesis is that traders up here are trapped going long. We've pulled away from those traders. Now, we're getting a pullback into the shorts. The market's always hunting for liquidity for the next move. So this indicator is referring to that breakdown, the reversal, and a continuation of the reversal of the uptrend. Because we've got 3 days longs, there is money down here. Not to say that it's going to get there, but that is the thesis. We're going against the bullish trend on the higher time frames. Let's have a look at that on the chart more closely. As you can see, the monthly chart there is the previous month low. I don't need to scroll back to look for it. I trust the indicator. That's the previous month low. So that's December's lows. You can check it though. There it is, December's low, Friday the 20th. This month we broke below it. So this is the start of the month over here. Quite a volatile open. We broke below that level and we've pulled back up. Okay, so that's a fake out low, FOL. Same thing has happened on the weekly chart. So we broke out last week and then we dropped and we put in a low for the week. This week we opened down, breaking down, but then we came back up within the range. So that too is a fake out low. So there is bullish momentum on the higher time frames while we're above the previous month low over here. So above this area, previous month low, including last week's low. So we'll just box it off as an area of 2 levels, creates an area of potential support. So while above that area of potential support, if it's to come back down into it, while above that, all of this here is bullish. So we're reversing, this indicator is telling us that we're reversing into that bullish trend. All of that bullish trend. Okay, so we as traders like that information because if the market is reversing into that bullish trend, and so long as it stays in reversal mode, i.e. below the breakout level, which is Wednesday's highs, because what that means is all of these traders up here are trapped, going long. And what can often happen, as we're seeing, is the market can come up towards those traders And two things can happen. One is that we have buyers that have gone long that are looking for liquidity to sell their position because they're in the money. So all down here you have traders that are potentially short. Okay, so they might have sold up here. So they've sold the market and they're moving their stop losses, their buy orders, trailing their stop. So these traders that are long, that are looking to sell, have liquidity in all of this here, and they can sell their position out to these unwilling buyers that are short. And those that have actually gone long are still holding on to dear life, desperate to get out at break even. They too are going to have their buy orders up here. So when you've got traders that are buying the market with confidence, they have unwilling participants up here that will take the other side of their position. So they will buy the position from these sellers. So you've got buyers that are going to sell up here, and you've got old buyers that are going to have their orders at break even. Okay, so they're going to be selling either at break even or potentially at a loss to these buyers. Anyway, so that's a little bit OTT for this analysis, but just to give you some context for what's happening, and this indicator is giving us still reversal continuation, because until we break back above the breakout level from Wednesday's highs, the indicator is assuming that because we've broken down, this pump will result in a dump. So if this starts to decelerate, this could well plummet as buyers dry up, profit taking, and then sellers emerge. Or, on the other hand, the buyers could stay in control, okay, absorbing all of the sell orders, and if the buyers stay in control, then it will likely keep going up. So it depends. Are we going to see an influx of sell orders from what could be a resistance level? So that's where we're at with NAS. There is no setup being flashed at the moment. It's a little bit early to be expecting anything dramatic out of the market in terms of a definite direction. We've got Wall Street open later on. Got a little bit of US data coming up. Industrial production, 9:15 ahead of the Wall Street open. In 15 minutes, we've got some building and housing data. Can have an impact, not too much. It's not particularly major red news, but it all goes into the inflation story and the Fed narrative around interest rates. So we'll see how things get on, but really the activity you'd expect in the main, 9:30 a.m. Wall Street open, and then for the remainder of the day, I choose to trade from 10 a.m. between 10 and 12 p.m. 10 a.m. 12 p.m. New York. Let the dust settle and see if you get a setup. Depends on how the day is setting up. I'm going to produce a video later today on that subject because it's very important. It's one thing having this wonderful trend predator to give you the context of what's going on overall on the higher time frames, but then it's about knowing how to use that context and the setups in accordance to what is actually happening on the day. So this was a bit of education to give you an insight to what that video is going to be based upon. Trap traders, where's the money, the order flow on the day, pumps and dumps and so forth. So it's about session, how is the day set up? So at the moment, this is looking quite nice in that respect for a dump, because what we're getting here are, as the indicator shows us, we've got a day that marries up with the lower time frame. The day is still inside, okay, so we're still taking our bias from whatever happened last. So we had that fake out high yesterday that broke below Wednesday's low. So fake out high. I'm trying to make my videos more educational, based around the indicator so that people understand how to use it properly. So fake out high, previous fake out high, dumping below Wednesday's highs. That's what makes it a fake out high. It was a breakout and then it broke below Wednesday's highs. I said lows, I meant Wednesday's highs. So it rallied and then dumped below the breakout level, fake out high. So we've got a fake out high after 3 breakouts. 1, 2, 3. That was the third consecutive daily breakout. Quite often that leads to a breakdown into the money. Okay, and now what we're seeing on the day, which is nice, if we're going to trade in line with the reversal continuation context of the market, potential at least, then we want to see on the day 3 levels of rise. So the 4-hour chart. So coming out of Asia, we've actually got 4 levels of rise. So the first 4-hour block, the second, the third, this is the fourth. But the indicator counts back 3 consecutive. So 1, 2, 3. But it's worth noting we actually have 4. So that's nice to see as well. Okay, similar, well, exactly the same as we saw on the daily chart. What we can expect is the price to potentially stall, give us a fake out high. At the moment, it's in breakout. All of these are broken out. But if these 4 boxes was to start to decelerate and we get a fake out of the previous level, then that is the setup for a continuation of the reversal. Like what we've seen here, the pump and dump, what we're seeing here is a potential pump and dump setup. But we're going to be monitoring how does the price behave at Wednesday's breakout level, because it could all change at that point and it could all start to flip bearish again. We need to see, bullish again. We need to see bears emerging at the level or below it. So we need a fake out high immediately, or we need the price to pump. We monitor to see what it does up here, and if it comes back inside again and then gives us what we're looking for, the fake out high on the lower time frames, either an 8-hour or 4-hour, that is our cue to align ourselves with the current context, reversal continuation, because we know that these traders that are going long are trapped and we want them to stay trapped. So some traders will be getting out of break even. Other traders will be stubborn in anticipation of a continuation, only to find that they're trapped again. And they were given one chance, and the next time they're going to be out of luck. They had their chance, and the market's going to run away from them. That's the thesis.